Hi, Judith Unruh here with Letty Ann and Associates Real Estate Services, and I'm back today with Lending Officer Scott Kiesling from Fairway Mortgage Corporation here in the Kansas City metropolitan area. We did a Zoom call on April 6th, which was shortly after our shelter in place went into effect at the end of March. And when we did that Zoom call, Scott was sharing with us some lending practices in the mortgage industry that had changed as a result of the COVID-19 pandemic. So we got a lot of positive feedback from that Zoom call. And we also got requests from people to do a follow-up Zoom call. So Scott and I were talking, and we decided that this was going to be a perfect time for us to do that follow-up because the country's getting ready to go back to business, right? And so Scott is here today to share with us a little bit about what's going on now. I encourage everyone to stay through this video. He's going to share some really important information with everyone. We're going to make it short and sweet and give you some great information moving forward. So Scott, thanks for being here. Can you?
My pleasure.
Great. Can you just summarize for us where we were at the beginning of April and kind of where we are now, if anything has changed or stayed the same, or just kind of give us a little summary there?
Yeah, I mean, I think just, now we know a lot more as far as what's going on. Obviously, the main issue in our industry right now is jobs and joblessness and furloughs and those kind of things. People have, job situations have changed in the last month, really since the quarantine went into effect. So that's really the main issue we're dealing with. We're seeing a lot of, there's still obviously a lot of activity. A lot of the loan programs out there, FHA specifically, have tightened up a little bit. But, there is a misconception that, they're shutting down. Not at all. FHA loans are still available. First-time home buyer loans are still available. Those kind of programs are absolutely still available. It's just that lenders are maybe just doing a little more due diligence regarding qualification and those kind of things.
Very good. And that's a protection mechanism, right? They don't want us to be in the same situation we were in 2008.
Oh, absolutely. That's a great point. We just want to make sure that, if we approve somebody to be in home, we don't want to put them in a situation where they're not going to be able to afford to make the payments. That's why employment is such a key. I had a conversation with a client, and when he closed on his loan, he asked, I have to verify employment again. And he asked why. I thought I provided you pay stubs. And my simple answer to him was, your pay stub is 3 weeks old. I go, since in the last 3 weeks, millions of people have filed for unemployment claims. So we are continuing to check all throughout the process that people's job situations have not changed, including the days of funding. You could buy a house and we go to fund that loan. We're going to check with your employer to make sure that you're still employed and nothing has happened with your income.
Wow, Steve, that's a really great piece of information that I think has been added since the beginning of April. That's pretty big because as we start opening up the country again, right? And as a realtor, I have a lot of buyers and sellers, buyers in particular, this would refer to them, who have waited, but some of them have been laid off and furloughed. How do I deal with those clients? What do I tell them, and how are you dealing with that situation?
And that's another great question. We know a lot of these things were temporary. Well, first of all, let's deal with the difference between furloughed and laid off. In our eyes, there really isn't a difference, okay? If you are not currently receiving a pay stub, then we can't count that income. So that could be either furloughed or laid off. But once you go back to work and we can prove that you are back to work, we can count that income immediately, okay? So that's the good about it. I mean, we know a lot of these things, especially employer technically calls it furloughed, that you're going to be going back to work. So we're going to have to wait for that point. We'll really recheck credit and those kind of things, make sure you were able to stay up on payments during this tough time and those kind of things. And you still qualify, obviously, but we can use that income right away.
Very good. And then what about the stimulus check that people are getting? Is that being taken into account as income for them at all? Or
that did just recently come up, and it's not considered income because there's no probability of continuance. Whenever in the mortgage industry we talk about income, we're going to make sure it has a good probability of continuing. Obviously, the stimulus check was really a one-time thing. It can't be used for down payment, source of down payment. That's not a problem, but not for income purposes.
I see. Very good. Thank you for clarifying that. So a little bit of a struggle there since our unemployment rates are so high right now. And I'm not trying to be, doom and gloom for anybody, but we've got real world things to deal with as the country opens up again. So how would you advise me to share with my clients how they can get through this period as far as their desire to buy a property as a first-time homeowner?
Well, I think it's really just continuing to take a fresh look at their current situation, because things obviously, it seems like it's been going on forever. It's only been a month, right?
Right.
So we will continue to take fresh looks at their income and down payment and everything like that, just to make sure that they're still pre-approved and they're pre-approved for the right program that's available for them.
And that's a great point, Scott, that I wanted to mention to everyone who's watching, that it's so important to have a great lender, which Scott is my preferred lender. Anyone can use whatever lender they want, but it's critical to have a lender who is aware of all of these changes that are constantly taking place. And
and I will give credit where credit is due. That's to Fairway Corporate, because we are conference call after conference call, and they're continuing to make sure that we are well informed so we can make sure you guys are well informed.
Very good. Absolutely. So they're on the cutting edge of what's going on and totally connected. And that's so important as that whole trickle down.
Right. It is.
Right.
Absolutely.
Very good. So country's going to open back up, right? People are going to go back to work and things are going to look good for everyone.
Yeah, I think so.
We're all going to be optimistic and so kind of let's segue from there into what are the rates right now? What are they today? And what do you see the rates doing from now until the end of the year? And what's the chatter in the business with Fairway?
Yeah, I mean, Fannie, we just received an email the other day, and Fannie Mae's prediction on rates for the remaining part of this year and into 2021 is very bullish. They expect rates to remain in the very low threes for conventional. Right now they're in the, you can get as low, into the high twos for FHA and government loans, those kind of things. So rates are really, really good right now. And I anticipate them staying that way. Everything I've read points in that direction as well. So, while it's important to try to get the best rate, you don't need to try to buy a house just to get locked in on an interest rate. That's for sure. Make sure you find the house you really, really want. And interest rates are going to be there for us.
That's such great news. I'm really happy to hear that. Great news. Because, like I said, there's going to be a lot of pent up, people have been waiting and now they're wanting to move forward with their plans that have kind of been put on hold for a little while.
Yeah. And I think, you're right. Everybody put their plans on hold. There were a few who, ventured out and those kind of things. But I think both listing and going out and looking at homes, people have kind of just are waiting for this to be over so that they can, get their house on the market and people can start looking at houses again. And I agree. There's going to be some pent up demand. That's for sure.
You think we're going to have a busy summer? I do. I think that, we're looking at in parts of our city opening up on Friday next week. And so it's just, everybody's going to be so ready for sure.
Right. Because like I said, it's only been a month, but you remember, back when this all hit, like mid-March or whatever, when it really started coming down, the weather wasn't good. The weather was not nice. And now we're starting to get some really nice weather and things are starting to open back up. So I absolutely agree. It's going to get busy.
Thanks, Scott. Thank you so much for giving us this update. And did you tell us what the rates were today? I can't remember.
Well, we did briefly.
Specifically?
It's hard to give a specific because everybody's situation is different.
Oh, right, exactly. So let's say 30-year, 10% down.
30-year good credit, 20% down. You're probably looking at 3.125 today.
Wonderful. Okay, and then what is the FHA rate right now?
FHA is going to be probably around 2.875.
And I know that at the beginning of April, we talked about some restrictions regarding FHA. Have they been lifted or are they the same?
We actually loosened our requirements on FHA recently back down to 640 credit.
Oh, very
Um,
good.
it had been up to 660, so not as much loosening as it was before this all happened. Before this all happened, you could potentially get loans at 580. But they're really concerned about, putting people in loans who, may not be in a position to, like you said, make those payments. So we want to be careful with that.
Right, absolutely. Well, that's still, that 3.125 is sure a great rate right now. And I
Yeah,
know that
absolutely.
at the beginning of April, we had just briefly touched on jumbo loans as well, being a little bit less um, forgiving or as far as requirements. How is that moving along with jumbos? And those are
That one's
loans
not
taken.
moving along quite as positively. There's a lot of jumbo lenders are really on the sidelines right now, just waiting to see what happens with the economy. So jumbo loans are a little more difficult to come by at this point, but I anticipate that loosening up as things get back going as well.
That's great. That's great news as well. Well, thank you so much. And again, I'm going to leave Scott's contact information below. And Scott, I know that you'll be happy to answer any questions that someone might have about their lending process that they need some input on. And what I love about the way that you operate your business is that you're always available to answer those questions, that calm fears, and find the right package for that individual, because everybody's situation is different.
Absolutely. If anybody has any questions, I'm happy to answer them.
Thank you so much, Scott. I appreciate your time and this great information.
My pleasure. Thank you.
Bye-bye.